Hi, this is Sean Hyman from Chart of the Day, and I just want to talk to you about and show you how the majors affect the crosses. I want to show you that. There's a pattern called a bear flag pattern, and I'm going to outline it here for you. There's the flag portion, and here is the actual flagpole. There we go. So picture a flag turned upside down. Elliott waivers would call this a 1, they'd call this a 2, and headed into a 3. So there's a couple of different ways to look at this depending on your type of analysis. But this deep sell-off had occurred. It consolidated part of that loss there. And basically these are breather patterns. This is where you picture the market running, and then going needing to catch its breath. This is the market catching its breath. And a lot of people think, okay, it's going to be turning around, so it's going to head back up. Many times more than not, actually what you'll have is a continuation of the pattern that was before the range. So since we were coming down in a downtrend and then we went into consolidation, usually you're just consolidating that trend and heading lower again. And that's what makes the bearish flag pattern. The bearish flag pattern only completes once the flag is broken to the downside. So it broke it, closed the candle below it, so somebody could trade there, or it could, when it pulled back up towards the base of the pattern again, is even better place to short. However, you don't always 100% of the time get this opportunity, but when you do, it's a great opportunity, and you have a great risk to reward because you can put your stop up here, and then you're going to have a big fall afterwards. So seeing that this bear flag was forming, seeing that it even broke recently, we can take and look and see how this affects the crosses. So this is euro dollar, a major, and let's go to a cross. One of the most widely watched crosses is euro yen, and notice what we have here. One, we've got a breakdown about the same time of euro yen out of a pattern. Now this is interesting because this is called a head and shoulders pattern, and let me just, you've got a left shoulder right there, you've got a head right here, and then you've got a right shoulder here. This right here is called the neckline, and if it breaks that neckline, that's when this pattern completes. So what did you have? You had some major euro patterns break. You had the bear flag on the euro dollar break, which whether there was a pattern here on euro yen or not, would have weighed down this pair and caused it to go downward. But being that we had a downward bearish pattern here that it was also completing, that was just doubly nice. And what you have is you've got you can draw a minimum price target by coming from the top of the pattern down to the neckline. Take that measurement and project it downward. Now, and if you don't have something like this in your charting package, you note the number of, note the price up here, note the price down here on your chart, subtract those, and you'll have the number of pips. Take those number of pips minus, subtract that from the price that it breaks out at, and you'll get your minimum price target. So there's more than one way to skin a cat, if you will. And your minimum price target is roughly right in here. And so we're almost to that minimum price target. Since it's in the ballpark of it and not a hard and fast rule, this could be enough to meet the target, just like if it had overshot it just a hair, would be enough to meet the target as well. So the tip off was the bear pattern, the bear flag pattern showing in the major, which is the euro dollar, and it shows us what is likely to come in the euro yen. The euro yen cross breaks down about the same time the euro dollar does. The weight of the euro from all the problems in, you name it, Greece, Portugal, Spain, all these countries, is really weighing down the euro at large. and across the board. It's most easily going to be picked up in the majors, and then it's going to have one of your bigger extensive moves in the crosses, and that's why I like the crosses so well. They tend to get trendy, tend to get directional, tend to move more pips than the majors. So, if euro dollar moves X amount of pips, euro yen will move X amount of pips plus some additional pips, typically is the way that works out. So you have more potential for gains out of the euro yen typically than you do the euro dollar. So that's why I watch the majors, even though I'm a currency cross trader, and I focus in on those currency crosses quite a bit. I still watch the majors because they can tip me off to things to come, and that's what I look for in our currency cross trader service that I run. When I'm looking for exact setups, and I'll give exact entries, exact stops, exact limits. And I will be looking at the chart of the cross most definitely and what's setting up there. But equally as much, I'm looking at the major that is most tied to it, which in this case would be euro dollar, and watching how it's acting, because I know if the euro is falling on its face, guess what? That's going to carry over into euro yen as well. It's going to help my bearish bias on the trade there as well. So that is the chart of the day. Thanks so much for watching. Bye bye.